How is Trump's 4D global fiscal chess game going? So far so good? Or so far, not so good. About a month or so in, and it doesn't seem to be working out as planned. We discussed what likely his plans were a few weeks ago, which you can check out on this video guide by clicking on the link above. And now we need to reassess the situation. How badly could things go? And what should we be prepared for as crypto investors? Hello, I'm Crypto Casey, and in this video, we are going to explore how the global financial system is rapidly changing in ways most people aren't prepared for, and 3 main things to focus on so we can stay ahead of the curve to protect and build our wealth. Let's hit it. Please be sure to check out our sponsors, GoBabyTrade, Uphold, and crypto wallets, Tangent and Ledger. If you're not using AI, especially in crypto, you're behind and leaving a lot of money on the table. Make passive income and profit from the volatility of the crypto markets with GoBabyTrade, an AI-driven robotic crypto trader. Watch a video review here and join us every Wednesday for the free weekly webinar to learn more. Store your money and manage crypto with Uphold, a Web3 platform that actually holds our money in crypto, doesn't lend it out, is the safest way to buy, sell, and trade digital assets, and is connected to 30 underlying exchanges so we get the best prices for crypto on the market. And make sure you own and use multiple cold storage hardware wallets. Tangent is super affordable, extremely easy to set up, only takes like 90 seconds, great for beginners. And Ledger Stacks and Flex wallets have extra security layers at the best discount on the market for our community. So scroll down and use the links below to redeem all the special offers they have for us. Sweet. Looking at the stock market, the S&P 500 price chart on the weekly with the Morales line indicator, we can see it has been in a bearish trend since February of this year, with the last few weeks in particular ending in these red candles, meaning it closed the week at a price lower than the beginning of that week. And when looking at another stock market index fund, the Nasdaq, same story. Now, when looking at what historically has been deemed a safe haven for investors during times of uncertainty, US Treasury bonds, demand for them has plummeted, causing their prices to drop and their yield to increase. The yield is the interest that the US government, aka us, taxpayers, have to pay on the debt. And global demand for US dollars is decreasing. And if we recall what we discussed in the last video, this is the exact opposite effect Trump wanted to have on the global fiscal situation. All the while, what crypto investors have been waiting for since Bitcoin's inception seems to have started happening a few weeks ago. Looking at the Bitcoin price chart on the weekly with the Morales line indicator, which we can get for a huge discount using the links below, Bitcoin, although still in a bearish sideways trend, has actually been relatively stable compared to other financial assets, has been closing with green candles over the past 3 weeks, and over the past few days has rocketed from around $83,000 to $88,000. Why is this so important? It could indicate that Bitcoin and potentially other cryptocurrencies are finally decoupling from the stock market, meaning that the price action could separate and become independent from the stock market, while historically they have tended to move together. It could also indicate that Bitcoin is finally becoming a safe haven asset for investors. So what the heck is happening? Check it out. One of Trump's main goals is to bring interest rates down. However, the only entity that can decide that is the Federal Reserve, a private central bank that is separate and autonomous from the United States government, meaning it doesn't have to answer to Trump, Congress, or anyone else. And the Federal Reserve references 3 main things to determine whether or not it will decrease interest rates and start stimulating the economy. 1, if inflation is low. 2, if unemployment is high. And apart from those 3, if the economy slows down too much like it did during the pandemic. When the Federal Reserve starts cutting interest rates and stimulating the economy by increasing the money supply, aka quantitative easing, aka money printing, typically stocks, cryptocurrencies, and risk-on assets start performing well. So basically, since the Federal Reserve has taken a hawkish stance on interest rates, meaning they plan on keeping rates the same and not starting to lower them until potentially next year in 2026, Trump is likely trying to force their hand by creating global instability and uncertainty, which causes an increase in demand for safer assets, the safest historically being US Treasuries. And this part of the plan is twofold. 1, to slow down the economy to the point where the Federal Reserve needs to start lowering interest rates, and this coupled with an increase in demand for US Treasuries, which would allow the United States to refinance its crippling national debt at a much lower interest rate, because we are currently paying more interest on the national debt than other line items on our balance sheet like defense, Social Security, etc. However, Trump's actions are having the opposite effect right now. In response to an increase in tariffs, China is increasing their retaliatory tariffs against the United States, threatening to slap tariffs on other countries that trade with the United States, all while dumping massive amounts of US Treasuries into the market. And with all the back and forth wishy-washy tariffs Trump is wielding haphazardly, it's actually decreasing global demand for US Treasuries, as well as US dollars. And if we recall from the last video, Trump was going to attempt to increase global demand for US dollars with a stablecoin bill he's been pushing Congress to get on his desk by August of this year in 2025 in an attempt to help the US dollar maintain its status as the world's reserve currency. When zooming out, looking at the big picture and considering the Triffin dilemma, which is a phenomenon where countries that command the status of the world's reserve currency also carry trade deficits due to the strength of their currency from global demand, this part of Trump's 4D chess play is not looking like it may pan out as planned. So all things considered so far, it seems like Trump's policies are stoking more deglobalization, de-dollarization, decreased demand in US treasuries, increased inflation, continued stalemate with the Federal Reserve, degraded relationships with our allies, and in addition to the flared up trade war, may instigate an actual military war with our adversaries, World War III, which wars are historically orchestrated by the international cartel of private central banks like the Federal Reserve, the Bank of England, the European Central Bank, etc. And you can learn all about why and how they cause world wars for their benefit and the benefit of the global elites in this video guide by clicking on the link above. Cool. So it's looking like things are about to get a lot worse in the US in terms of inflation, supply chain jobs related to shipping ports, trucking, delivery services, because we've got cargo ships with goods coming from China straight up turning around and rerouting. And when considering the amount of time, capital, and skilled labor it takes to build factories and industrial operations domestically in the United States, we really don't stand a chance at manufacturing the valuable goods and resources we need to maintain and grow our economy for another 5 to 10 years or even more. Very, very bearish for the United States. So there are a lot of things out of our control as investors. However, we need to be aware of them so we can position ourselves to take advantage of the rapidly changing global financial landscape to protect and grow our wealth. And many people are super unprepared and will miss the boat, literally be stranded on a deserted island financially because they're going to continue to listen to financial advisors who will continue to tell them to be diversified across stocks, bonds, gold, indexes. Here's why that model will not work going forward. Traditional debt-based finance is on the way out, which we will break down how and why in a second. A new equity-based next generation of finance is upon us, and we need to start participating in it right now, which we can start doing today. And the safest way to do it is with an Uphold account, a Web3 platform that provides us with a way safer, better option for buying and managing crypto than exchanges, as well as a way safer, better option for storing US dollars than banks. Because all of our assets are 100% there, not lent out against our will like banks and exchanges do. It's completely free to sign up, only takes a minute, and we get the best possible prices for Bitcoin and crypto because it's connected to over 30 underlying exchanges, which also gives us more liquidity when trading. And as we accumulate our Bitcoin to hold over the long term, the only surefire way to completely own, control, and secure it is with multiple hardware wallets. Tangem is super affordable, extremely easy to set up, only takes like 90 seconds, great for beginners, and Ledger Stacks and Flex devices have extra security layers, and our community gets the best discounts on the market using the links below. All right, so here's why most people's portfolios will get wrecked over the next year or so from not paying attention and using outdated strategies like buying stocks, bonds, and gold instead of getting into a position to catch the upcoming next wave of wealth. Back in January 2025 is when this market decline started. Why? China built and released DeepSeek, an extremely powerful artificial intelligence model, for literally fractions of the cost, only like $6 million, and in almost no time, like 2 months, compared to US companies like OpenAI, Google, etc. And this caused US tech stocks to plummet because companies like OpenAI, Google, and Meta were throwing billions and billions of dollars at AI models for years, which made investors start to think they are overpaying for their stocks, aka uncertainty. A historic $593 billion of NVIDIA's market cap alone was wiped out a few days after DeepSeek launched, which is not normal. That's massive, which caused the NASDAQ to drop 3%, and the largest stocks by market cap, Apple, Amazon, Alphabet, Tesla, Microsoft, and Meta, also experienced massive sell-offs. And it's important to note that these large companies by market cap are the main ones that hold up indexes like the NASDAQ and S&P, the foundation of the traditional US stock market, one of the main investment strategies people have been using for decades. These index funds are an extremely passive form of investing and do not react ahead of time to what's coming in the future, which is putting a lot of people at risk because it's an extremely fragile part of the financial market right now. AI is breaking the traditional financial system faster than we thought, rendering old investment models pretty much useless because the way people have historically valued companies doesn't really work anymore. Technology is changing everything extremely quickly. I mean, personally, I have a degree in finance, and most of the things we learned aren't even relevant anymore. P/E ratios, DCFs, EBITDA, multiples, all of those assume linear growth of companies, and now with AI, we are experiencing exponential growth. It's making things cheaper, faster, and more scalable in ways old models can't predict, which is contributing to market uncertainty and fragility in the overall global financial system. Sure, scary. However, this is where our golden opportunity is to get ahead of the new wave. And it's simple. There are 3 base technologies we need to focus on that will become the foundation of the new financial world over the next 5 to 10 years. 1. Commodities and energy. These are the things we build the real world foundation with, like data centers, nuclear, oil, gas, copper, lithium, uranium. Think of them as the new US Treasury bond play that gives stability, leverage, and resilience to our portfolios. All equity-based instead of debt-based. In fact, as we discussed in the last video, it's very likely that US Treasury bonds, which are currently the linchpin of the financial scam, propping up everything like an inverted card house, as you can see here, with commodities, stocks, corporate bonds, futures, derivatives, and options precariously on top of it, the new financial system will be equity-based, resembling a fortified pyramid with commodities like gold, Bitcoin, oil at the base. All right, next up of the 3 things. 2, AI and deep tech, the exponential growth engine. So not necessarily going out and trying to buy AI related stocks, more so trying to identify specific companies that are building out the models, infrastructure, and tools to capture the value of AI by adapting the fastest, like we saw with DeepSeek. And 3, Bitcoin. An asset that is a monetary layer outside of the old, corrupt, rigged, failing traditional system. Our current monetary system is wrought with debasement, censorship, capital controls, downright money from nothing scam, which you can learn all about by clicking on the link above, and Bitcoin is a lifeboat. We're in for exciting times, so what's nice as crypto investors, the strategy is simple. Stack sats, buy Bitcoin. And another interesting strategy I've been using over a year now that has actually made me a lot more money than buying altcoins low to hopefully sell them to someone else for a profit is an AI-enhanced robotic crypto trader called Go Baby Trade. In my experience and many others, it has performed like a set-it-and-forget-it trading product, generating passive income pretty much every day. And more recently, I discovered we can also use it to implement the best DCA or dollar cost averaging strategy for getting into Bitcoin positions or other cryptocurrencies we are interested in building larger long-term positions in. We'll cover this in another video. Tons of y'all have become raving fans of Go Baby Trade since we first explored it together back in August, so definitely take 1 hour out of your life to join us on the free weekly webinar every Wednesday to learn more. Awesome. If you'd like to learn more about how Go Baby Trade works to diversify your crypto investment strategy, check out this video. If you would like to learn more about Uphold and how it's a way better option than banks and exchanges to store our US dollars and manage crypto, check out this video. And to sign up for a free Uphold account, the next generation of finance, click on the link on the screen. Like and subscribe for more. Be safe out there.